is Craig from the Craig Trader channel. Welcome back. Welcome. Thanks for tuning in. And I have a very hot topic for you today. I think that it will help a lot of investors, most investors. If you have some sense of risk, taking a little more risk to get possibly a lot more return, then this video is for you. If not, of course, consider it. Before we get started, I'd like you to like, subscribe, hit the notification bell so that when you hit that notification bell every time I come out with a video, you'll be informed of it and be able to tune in. And then also share the video with your friends, family, co-workers, those that you may want to get involved or keep involved with investing in the stock market. Of course, you know a little bit background with me being an investor. I have gained money a lot, and I've lost money in the market, as most investors have. All investors have lost money at some point in their lives, in their careers, and continue to lose money no matter how experienced we get. So, coupled with this, I'm going to give you also a few techniques on risk assessment and how to decrease the risk with these particular ETFs. Also, check the links in the description, and you'll find information in there, as well as if you haven't opened up any brokerage accounts or you want to open up some more, there's some links in there to open up some more brokerage accounts. So the topic of this video is to how to beat the market and triple your account with these three ETFs. I have three ETFs that I'm going to give you. So if you want to jot them down, or you can go back through the video, and I'll put them in the description, as well as in the comment section. Also, how are you all liking these videos and information that I'm bringing you? Make some comments. Please be cordial, please be nice, and let me know what you think about the content that I'm going to be sharing and that I am sharing on this particular channel. So, how to beat the market and triple your account with these three ETFs. So we know that this is a possibility. It's not guaranteed. This is not investment advice. I'm simply sharing some information of things I know about, what I do when it comes to investing, and also sharing information with you about the historical evidence of what these investments have done over time. And that's, of course, not indicating what it will do in the future, but the way they correlate to the regular market is pretty sure. So if the market is doing a certain thing, these investments will possibly, most of the time, triple whatever that particular market or investment is. Now, the particular ETFs that I'm going to be talking about are based on some index funds. So you're familiar with QQQ. So we're going to pull QQQ up just to show you. QQQ being the NASDAQ 100. And as you see over the past year, what it's done, it's up 19% over the past year. Since year to date, it is up 11%. Now, just to show you an example, one of the funds I'm going to be talking about is TQQQ. So it's triple times what the QQQ or NASDAQ 100 has done. So see, this is ProShares Ultra QQQ. TQQQ is the symbol. And as you see over the last year, it is up 28%, almost 29%. And the year to date is at 12%. Whereas, as you know, the year to date on the QQQ was back here, 11%. The year ahead, 19%. Now, at this point, we see that there was a big dip, of course, in the market, starting at about February 19th down to April 7th. From here, we can start tracking basically what has happened. So we're looking at, if we go to the 3-month chart, so in 3 months, QQQ is up almost 11%. If we go to TQQQ, past 3 months, look at that. It has tripled. So TQQQ, rather than being 11% like QQQ in the past 3 months, is up 31%. 31%. So you can participate in these two no matter what amount of money is. So the share price is one thing, but you want to look at the increase or the percentage increase or decrease of a particular investment. That's what really matters. So you could have tripled your gains simply by having this stock in your portfolio or ETF in your portfolio rather than just having QQQ. And you can, in Robinhood, this is a Robinhood account, you can buy it in partials. So as you see my market value there, it's only $131 right now because I took money out of TQQQ and the other ones I'm going to talk about, and I put them mostly into, I have a lot of high dividend yielding stocks. As you look over here to the right, I have some stuff now. I've got a 3 times SoFi, which is doing well, but I have I'm reinvesting and investing in high yield funds. So you see YMAX, OT, IWMY, things of that nature to increase my income, my passive dividend income every month. So you can do this with any account, small account, large account. You might have $100, $50 to start with, $500. It doesn't matter because in the Robinhood account, you can buy it in partials. You can literally buy stock with $1 if you want. And you may say, well, I got $20, but I'm not going to make that much money on it. Well, look, a 30% return of $20 is a 30% return, whether you have 100, 20, 500, 5,000, 5 million. Percentage is percentage. And so that is how you can scale up your account, is by investing and putting in a certain amount of money and then putting it into some of these kind of funds. Now of course, they're more risky because they're more volatile. They go up with the market 3 times what the market is. Like say, for instance, you've got SPY, which is the Spider S&P 500, and in the last 3 months, that has gone up 9.95%, or just say 10%. Now, the one that correlates the ETF that I'm referring to you guys or sharing with you that I invest in is SPXL. And if you see the last 3 months, look at that. See, up almost 30%. So you're going from 10%, basically 11%, 30%. So roughly a 3 times or 3x, which is why these ETFs are named, as you see up here, by direction, daily S&P 500 bull, 3x. And in a later video, I'm going to share if there's a down market or a market is trending down, there's some other ETFs you can use to actually make money while the market is going down. But for this purpose of this video, we're looking at how to basically increase and leverage up your value of your account without having enough money in it to get a margin account. Most brokerage companies, they need you to have $2,000 to get what's called a margin account. And with a margin account, you can actually borrow money in that account to leverage up or buy more shares of stock than the actual cash you have in an account. And we'll talk more about that in another video. But this is for investors, small and large, or even if you're a small investor, this is something that you can use, tools you can use to leverage your account up. And so the TQQQ, of course, this is the 3 times leverage ETF, and it tracks the NASDAQ 100. So like I said, if the NASDAQ goes up 1%, then TQQ aims to go up about 3%. And so it's tech focused. This SPXL, this is a 3 times leveraged ETF tracking the S&P 500. So that's the 500 largest companies in America. And this is amplified 3 times what the regular market or SPY would do. Now, the third ETF that we're going to talk about is TNA, Direction Daily Small Cap Bull. And like I said, these run fast and hot. So if this particular market, which is the small cap index, goes down, then your investment in this is going to go down 3 times that. But as long as it's trending upward, you're going to still come out on top. So we'll see over the last 3 months, this is up actually close to 40% over the last 3 months. So if you had put $1,000 in it, your account value would be worth 1,400. Now, my way of doing it is because I like to try to get the most or highest potential gain I can with the least risk possible. And the way you do that is by diversifying your account. So one strategy you could think about is you could go into all three of them and just roughly break them up 33% roughly into all three. And then whatever the increase is, of course, is combined in that. Or you can figure out something that's preferable or comfortable with your term investment. So, and you can mix and match these also, couple them with if you're just investing in stocks and other funds or indexes. You can take QQQ and SPY and also the IWM, which is the small cap fund. You can take all six of them and break them down into a six each. You know, roughly 15, 16%, whatever, into each one, and you won't get the exceptional gain that's possible just by doing the three times or 3x funds, but you're coupling it and you're increasing the gains by just not just investing in the index itself. So also keep in mind that what I like to do with these investments to help on the downside or possible downside is to do what's called a stop loss or you do a tracking stop loss on this particular investment. So say this, for instance, say we want to sell in this particular platform, I can go to trailing stop, which is called a trailing stop order, and I can put a percentage in here. So if the account is up, as we see over here, account is up 40%, close to, in the last 3 months, and say, well, I don't want uh, to risk losing all of my money back if the market turns and this goes down. Then you go over here to put a trailing stop on it, and I usually do this with almost all of my major investments. I put a trailing stop, we'll figure out a percentage. So if you don't want your particular investment to drop more than, say, 20%, then you would put the percentage in there, 20%. You go down here, whatever number of shares it is. So if you have 10 shares of something, what I like to do is keep at least one share. I don't like to sell out of my whole account, even if it falls. So I will keep at least one share to track it, or a portion of a share if it's if it's a pretty big price stock. But if you do this, we'll just say one share that you're going to sell. You don't want it to expire the same day. That's no good. But of course, you go down here, and this is usually 90 days out that it'll expire, and then you have to put it back in. But this trailing stop will prevent this from falling all the way. Like, you know how people get caught up in the market drops and their stocks may fall 30, 40, 50%. Well, you can prevent that in your account by using the trailing stop feature, and you put the percentage that you're willing the stock to go down, and then it'll trigger a sale on its own, and you won't have to worry about losing money or losing more money than you would have lost by not having a trailing stop on it. So as you see here, the estimated credit, the price is 41 right now. This is saying with the 20% downside that you'd be getting 32.79 if it triggered that sale. So that's how you do that, and then that way you don't run the risk of losing much of your account, and you actually still come out with a profit. And then what I do is I track it. I make sure, look at the stock, say it's fallen, and we see, like I said, let's go back here. We see that the stock for this particular ETF, TQQQ, was up to 85 over here on January 6th of 2025, went up here to $90 February 19th. And then, of course, market, because of the tariff news, I believe it was at the time, and all this kind of stuff, just began to crater down, down, down. So it went from 90 bucks all the way down here to 41 bucks. We're talking about cut in half, more than in half, because of course, the triple value of it, or the triple leverage feature on it. But once it bottomed out, so say if you had triggered the sale at 20% and it sold out around here, you can watch this and watch it as it goes down, see what it's doing. You may want to pick up another one while it's going down, dollar cost average. You never can really track the bottoms and tops of stock or ETF. But as it got lower, I probably would have been buying some more down here, buy a little bit more. Then down here, it hit a bottom. Of course, if you're dollar cost averaging back in, you're buying as it's going up. You're buying as it's going up. And from the bottom here of 41.25 on April 7th, 2025, now you can see today, August 25th, 2025, we're at $90.51 right now. Another thing I like about the Robinhood platform is it reports the pricing in real time. So as you see, it's 90.51 right now, but that could change at any moment because it's actually tracking the real-time pricing of the stock or ETF, and it literally changes many times while you're just looking at it or checking over a particular stock or ETF. So this is a very powerful tool. You can watch it. There it goes right there. See, it moved to $90.53 now, 56. So stock is kind of going up right there. But this is a very powerful tool that can be used for your investment portfolio and used for you to really gain um, an increase in your account value, the money that you're putting in, to really leverage it to increase and grow faster than it ordinarily would, 3 times faster than it ordinarily would, by going just into the particular index. So please hit a thumbs up on the video, like, subscribe, share it with your colleagues and friends, family. And also, if you have any particular topics you'd like me to talk about when it comes to investing, I'll see if I can do that. But I'm just going to be sharing more and more content on uh, things that will help you just grow your account, as well as I'm going to also be sharing some of my high yield ETF investments that I'm doing to provide an income, a more steady income, as I move more toward replacing my regular income with dividends, to be able to totally leave any kind of 9 to 5 or even side hustle gig or any of that kind of stuff if I don't want to do it anymore. And I am up a little bit older in age than a lot of you, maybe, but and I've made mistakes, like I said, but right now I'm on the increase, gaining my market share back, gaining my dividends back, and track me, and also enjoy with me the journey as we go along this together. So thanks for tuning in. Look, like, subscribe, check the links in the description. Look, stay positive, stay focused, stay blessed, and I'll tune in with you and see you again soon.